Hey folks, welcome back to the channel, welcome back to a new video. It was yesteryear since we have been looking at the DXY, the dollar index, and since it has been such a long time ago, I thought wouldn't it be nice to look at it again and see where we are on our macro targets. We're going to look at it together with the S&P 500 because they are telling us an interesting story. If you like the content, please do me a favor. Like, subscribe, click the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Also feel free to follow me on Twitter and Instagram. You'll find both those links in the description. Without further ado, let's start diving in. It has been no secret that I have been yelling for approximately 109 on the dollar index already for a while, and that is because that is exactly the golden pocket. And I said, well, if we are really putting in a top here, then you want to see some kind of a retracement, and then the golden pocket would be the absolute ideal area to do so. Then you're really creating a lower high, and then your change in macro market structure is confirmed, and then you can go lower. We're also looking here on the daily, so this is a very big time frame, and actually the price action that we had so far, it was quite interesting because we had this major run up. This was actually when shit started to hit the fan all over the world with war and inflation and I don't know what, and you see this major run up, and actually we're just constantly creating higher highs and higher lows until we had here a bit of a hold up, and then we changed structure, and everyone was thinking, well, that was it, now we're going down, inflation is coming down, and therefore you also saw that the dollar index was coming down, stocks went up, and now we are going high. And I already said that actually since the moment that we were creating here this major bullish divergence, I've been looking at this for weeks and weeks on end for it to play out, and you see the price just constantly making lower lows, but the momentum waves were creating higher highs. Took a long time because the money flow was just pouring out, and then eventually we picked up steam. Well, the move that we had eventually was not that big. 4 or 5% for the dollar index. It's a lot, of course, but for such a big divergence, I actually expected more. I actually expected us to go to the golden pocket based on that kind of strength, but we didn't. We actually even made a lower low. Well, there is actually a few interesting things that has played out, and that is that if we would draw a support and resistance line above these tops, let me make this yellow and a little bit more fat, then it's easier to read. And then you can see that it also has been support and resistance very nicely later on. We broke through it. This is actually when a lot of people said that was it. Now we are going lower for the dollar index and much higher for the stock market. And I remember this very clearly. There were also even headlines on CNBC, people saying this rally is not over yet. That usually is the moment where you need to start paying attention, and that was also the moment that we just very constructively went higher and higher and higher, and this looks bullish as heck. If we just look here at the momentum waves, I mean, look how fat this is in the blue, money flow fat in the green, view up looks good, RSIs tight together. This puppy is not going to stop anytime soon, so I think we are really going to march higher to that 109 on the dollar index for the next couple of days or weeks. This so far looks super constructive, and it reminds me actually of a period of time that we had in the S&P 500, and I'm right away going to go there. It was actually after the Rona dump that happened here, and then we thought that the world is going to burn down and it's all over. We dumped down 35%, we crawled out of the hole, and then we entered a period of time that was also very constructive to the upside. As you can see, some people also call this just a stupid crazy time, because you could have put a support and resistance line underneath all of these lows and all of these highs, and you can just see that price was just for 2 years long slowly but surely grinding higher, and every time we hit a resistance we went down just a tiny bit to then hit support again and then move up to resistance again, and that just went on all the way from June 20 was it even the beginning, April of 2020 to all the way November 2021 until we kind of topped out. But it just looks actually like crazy price action. Like I said, very stupid way actually, not really highs and lows, but just slowly grinding up. And I see that kind of also now here going on for the dollar index, so I wouldn't be surprised if we're going to hit that 109. Other than that, we also had this support and resistance level right here, 105. We nicely broke through. Maybe we get a retest, but then eventually there's actually not so much that is holding us back. If we're zooming in, we have here two significant highs on the daily candles. Then we have our golden pocket. Above the golden pocket, there's nothing. There's nothing. These highs are so close to each other that I think once we start breaching here this golden pocket, I think we're going to take out all of these highs and we are going to create new highs. What is necessary to create new highs on the dollar index? Very simple. Inflation needs to start picking back up. Guess what? It's already doing that. We already had 3 readings in a row that where the inflation was slightly higher. We can debate later on about what was the cost, but we do have higher inflation, and therefore you see that the dollar index is slowly marching up. Well, what is then the S&P 500 doing? Once the dollar index is going higher, then the S&P 500 is going lower. Not so synchronous as the dollar index is doing, because you can really see that actually we have a high and then a lower highs. This looks actually very, very bearish, but eventually we are coming now down. So we having a high, then we having a lower high, and now we are creating a lower low. So you would expect then again a lower high, and then we continue further down. I have to say on the S&P 500, this looks on a macro, we're also here on the daily by the way, pretty bad. I'm not gonna lie. We just had this extensive period of time with green money flow, momentum waves to the upside. This actually just looked pretty strong. It was really a relief rally, and now we are seeing that the money flow is flipping into the red. We have this big wave here on the downside. We could go down maybe 1 or 2 more days and then eventually go up, but the fact that also the RSIs are pointing together to the downside, I think we can expect more downside. The weekly, same kind of story. Look at this VWAP here, this yellow block is just pointing so far down. The same for the money flow, the momentum wave. Yeah, this just actually looks very, very bearish, so I wouldn't be surprised if this thing for the next couple weeks or months is going to go lower. I know that if you're just looking at the chart right now of the S&P 500 here on the daily, like I said, this looks kind of bloody, kind of ugly, but still for the yearly we are putting in 11.75% return. The average is at and around or just slightly below 10% a year, tracked over the last was it 65 or 70 years. Incredible return. So knowing that we actually still have a pretty strong positive year for the S&P 500, although we still have inflation, everyone is talking about recession and all kinds of horrible stuff that's going on, still the S&P 500 is pushing out so far a positive return. So we still need quite the push to the downside to go to around that zero level. That will be around 3,900, or let's say 3,900, 3,850 points. If we just quickly look then at the S&P 500, just from a chart perspective, then we're seeing that we're having a gap here. That is a rollover gap in contracts. We almost closed it yesterday. We're having these lows right here. Let me zoom in. If we are going to breach those lows as well actually then I think there's just not so much resistance underneath anymore, because this is going to be one major liquidation fest. I've also talked about this in a short on YouTube, and then my target would be approximately 4,050 points ish. Don't take me for 1 point more or less, but approximately 4,050 points. So I wouldn't be surprised if we eventually get there once we start taking out these lows. Like I said, so far it looks like we are slowly getting a little bit oversold, because also on the smaller time frames and the regular RSIs already saw that the 4-hour is in the oversold area, the 12-hour already a couple times. So yeah, I wouldn't be surprised if we get a little bit of a move up, but I actually am still aiming for much lower in the next couple weeks or months to come. Would we also lose the 4,050 points? Well, then we're getting in a pretty ugly area, like I said, around that 3,900 or 3,850. That is then kind of the zero line for the year. Well, then you're getting in negative territory, and then it's actually very easy. 1, 2, maybe 3, but I would say this is then 3 actually, this whole thing right here. Then you actually really need extremely bearish news and some really extreme events. Maybe again inflation picking up tremendously. maybe something terrible with a war in Ukraine or Russia, nuclear war, let's hope it never happens, but something extreme like that is then what you need, because you need to feed the panic and the fear in the market to create such a major dump. The same is actually what we've seen here as well, where just inflation was just the headline for weeks to come, and that is what is pushing price eventually lower. And here it was Corona, and if we go further, 2008, of course, it was the credit crisis. So you need really a big narrative that is not an isolated case in an area or a country that eventually could push the biggest index in the world really down to these levels. For now, like I said, I'm staying a little bit bearish, I'm staying a little bit cautious, because if the DXY is going to keep pushing higher to that approximately 109, of course, then you can expect the S&P 500 to go lower. And once we reach that 109-ish, then I'm keeping my eye out. Are we going to reverse here? And don't take that then by a day. It could be even that we spend a couple of days or weeks around that level and then eventually reverse. This is the dollar index, so it moves slow, it moves also with small percentages, so don't take this for the exact dollar, the exact point, but we could spend there some time and then eventually we roll over. If we do not or not spend there any time, we just bust through like it's nothing, well, like I said, then we're going for the highs. And then I'm also really expecting actually for the S&P 500 to pick up pace to the downside and to really start taking out all of these lows, and then you can really have your bloodbath. So it is really a if-then kind of scenario. If something happens with inflation, then the dollar index will pick up. Then you also see that the S&P 500 goes down, and then we'll see it from there. So a little bit of a different video today for once. I hope you liked it. If not, then also just please let me know. If you do like it, then do me a favor, like, subscribe, click the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. And also feel free to follow me on Twitter and Instagram. Those links you'll find in the description. See you guys very soon again in the next one. Bye bye.